Good morning, MF Global Traders. John Caruso coming to you here for October 6, 2011, here to give you the opening comments in regards to the currencies and interest rate markets. We'll take a look at today's number that came out, jobless claims. We did see a rise back up over 400,000 to 401, relatively in line with what the market was expecting. But we also have, we've got the dollar pushing higher right now. It's pressing up against 80 again. We're trading about 79.90, up 50 ticks on the morning. We did also see the ECB and the BOE policy statements this morning. ECB chose not to take any action. They held rates steady, which comes to a shock. A lot of people thought that they were going to repeal July's rate hike and drop the lending rate over there to by 0.25%. This also obviously comes to to us as a shock that the ECB can kind of sit back and really do nothing as far as their crisis is concerned. At the very least, we would have expected maybe some a stimulus injection back into the eurozone, but they chose to stand still. Bank of England right now, they did hold rates steady. However, they are injecting 75 billion pounds, which equates to approximately 116 billion US dollars into their economy. Which has the British pound right now on the defensive. It's down about 158 points, trading right at 153, which could be a support area, but that remains to be seen. The euro right now down 95 points at 132.55 off of the inaction from the ECB. So that kind of comes as as a shock to us. They've got all kinds of sovereign debt issues over there. Greece is falling into the water, or falling underwater. And of course, Moody's did downgrade Italian sovereign debt here yesterday. So it comes to us as a shock the ECB chose to stand still. Bonds right now, bonds and notes relatively flat on the morning. 30 years trading 143.15, 10-year 129.29. I still think we've got more upside in the short run until it appears as if the Eurozone problems seem to be underway of getting resolved. So I would expect another run higher in the 30-year and in the 10-year, as well as you've got to keep your ears open for any possible statements from Ben Bernanke and the Federal Reserve as to maybe initiating QE3 or additional stimulus back into the U.S. economy. So for the time being, I still believe we remain bonds and notes will remain trading higher here in the foreseeable future. Until any action is taken by the Federal Reserve. So that's all I have for you this morning. Feel free to call me, as always, 1-800-445-0567. And remember, trading futures and options carries risk and may not be suitable for all investors.